Well, look at this. You want to see kind of a turnaround here? So yes, shares of Sherwin-Williams barely in the red. They were at the very bottom of the Dow Jones Industrials earlier in the session, now down just a fraction. I don't know, it feels like if we showed an intraday, we could see how the climb has come. The paint and coatings company did miss on second quarter earnings and cut the outlook for the year as it expects softer demand to persist through the second half of 2025. But our countdown closer says that the materials sector is an opportunity. So we talk a lot about technology and AI in this show, but let's get to Key Advisors Group co-founder and CEO, Eddie Ghabour. Eddie, materials, let's talk about it. Why do you see a better opportunity here?
Well, I think one thing we've started to see is we're very dynamic in how we manage assets for clients as things are broadening out in the market, and that's extremely bullish. So instead of being as concentrated in tech as we have been, we have started to rotate into other areas. And one of those other areas we're looking at is materials. And one of the big reasons why is the EU just announced they're going to be spending 5% of GDP on defense spending from 2%. That is a massive increase. And due to the geopolitical risks out there, we think you're going to see many countries follow. And that should bode really well for material stocks. Today's another great example is that ETF's performance, and it has really started to catch a bid. So we expect as this broadening out continues to have areas like this continue to outperform on a relative basis.
Well, it sure is interesting and a little bit refreshing to see that investors are waking up to, as you say, broadening or expanding their horizons beyond tech and the Magnificent Seven, et cetera. I mean, that was really quite the trade in 2024. When you're talking about materials, where do you believe the real demand is going to be generated from?
So we think the demand will really be broad-based, which is why instead of trying to pick one or two names, where we're focusing on for our client base is the ETF. It's got about 65% basic materials with Newmont, Freeport, DuPont. You just mentioned Sherwin-Williams. That's also in the ETF. And so for our client base, that more broad-based structure in this sector is an area is why we think the best risk-adjusted return is for the retirees that we manage assets for.
I swear, I'm looking at Sherwin-Williams. It looks like it's possibly going to turn positive. Who knows? But it's down now just a tiny bit of a fraction after having been the worst performer. You are one of the most bullish people out there on the S&P 500. You're looking at, what, 7,300? What's going to get us there?
So we think we could get to 7,500 actually over the next 12 months. And the reason why I say that is this is one of the best setups we've seen in 20 plus years, because when you look at the bazooka of liquidity that's going to be hitting this economy in the next 12 months with the tax cuts, with the deregulation, as well as the fact that we're not going to be going into a recession. We believe we may get some softness in the next 2 months, but going into the fourth quarter, we expect major acceleration on the economy. And there's still so many doubters out there. And as long as they continue to be there, it's going to be bullish.
Eddie Ghabour, our thanks to you, folks.